Morning, folks, and today's episode is called Paul Graham of Y Combinator, the best investor ever. And just to note, I'm calling him the best, not the most successful, and for reasons that will become clear as we go through the episode. I love covering stories where it's about how someone does something differently. Somebody has a different worldview and then uses that to have such a big and positive impact. I came across Paul Graham when I read the excellent book The Power Law by Sebastian Mallaby. It's full of great stories about the venture capital world. Really recommend you read that. It's a classic. And before I'd read it, I had heard of Y Combinator, but I'd never really dug into its foundation. But Mallaby in his book does, and it's fascinating. So I was really happy to take this as a subject and dig into the research and find out more about Paul Graham. And he set up Y Combinator back in 2005, and over the years, it has invested in 5,000 startups. Now, these companies collectively, they hold a combined value exceeding 600 billion. More than 400 of these companies are valued at over 100 million, and over 100 have achieved valuations surpassing a billion. So, fantastic success. But it's about more than money or numbers, the story of Paul Graham. It's about this guy with really huge, massive intelligence and a very singular, but also a very philosophical way of looking at business, at startups, and at life. And it's the story of how he revolutionized the venture capital sector. It's a fascinating story. Just a quick reminder, while these shorter weekly episodes released every Wednesday are free for everyone, for just $1.99 a month, you get access to our co-hosted hour-long episodes released on the first of every month, where Keith and I do an even deeper dive into an incredible business story. Some of these hour-long episodes are still free in our back catalogue, so you can get a taste of what to expect. Now, as well as getting access to these monthly co-hosted hour-long episodes released on the first of every month, behind the paywall are additional bonus episodes, and over the coming months we'll be adding more bonus content for subscribers regularly. Also, as a subscriber, you can listen to these weekly episodes ad-free, so you won't have to listen to me telling you about our great subscription offer. And it is great value for just $1.99 a month. You can subscribe via Apple subscriptions, Spotify subscriptions, or on Patreon using the link below, or go to patreon.com/Great Business Stories. So, Paul Graham was born in 1964 in Weymouth, in England, but he was raised in Pittsburgh, and he was a curious and very talented polymath. He studied philosophy at Cornell, he painted at the Rhode Island School of Design and in Florence, he got his computer science doctorate at Harvard in 1990, and long before he became known as this, I suppose, patron saint of Silicon Valley's young founders, he became known for his dedication to Lisp. This is a programming language that most engineers would have thought as uncommercial, obscure, even kind of eccentric. But by the early 90s, Graham had written two very influential, but again very niche books about Lisp. But he was restless. He didn't want tenure with Harvard. He wanted to build something. And in 1995, at the age of 30, he joined forces with a guy called Robert Tappan Morris. Now, in hacker circles, Tappan Morris was infamous, I suppose, but also very much admired. He was the guy who released the first internet worm. And this, of course, earned him a felony conviction and notoriety, but also fame within hacking circles. So these two guys, Graham and Morris, they started up a company. And they set up shop in this crumbling Cambridge apartment. They described it as cracks in the walls plugged with tinfoil. And their goal was to build software that lets anyone create an online store right from the browser. And they called the company ViaWeb. So this is, well before Shopify or any of these other companies came along. It was really a software as a service company, or a SaaS company, well before the phrase existed. And of course, they built ViaWeb on Lisp. The programming world considered Lisp too weird, too academic, but for Graham, it was extremely expressive and it was perfect for rapid development. And that was ViaWeb's secret weapon: speed. Now, besides himself and Morris, their third partner was Trevor Blackwell, another Harvard-trained hacker, and they lived off $10,000 seed check from a lawyer friend, and apparently refused venture capital altogether. So any additional investment they did get came from individuals. I wasn't able to find out how much outside investment they got overall. But anyway, inside their tin-foil walled office, the programmers, they never held meetings. Decisions happened on lunch walks. In late 1996, ViaWeb went live. Within a year, it was hosting 500 shops. A year later, it was hosting 1,000 shops. And of course, with the growth came imitators, but none of them could match ViaWeb's pace. Like when a rival announced a new feature in a press release, ViaWeb's team often built the same feature before reporters could even publish their stories. As Graham said, we were just able to develop software faster than anyone else. But as they grew, they also encountered this paradox, because ViaWeb's core team was so small, just the three founders, that any potential buyer of the company found it hard to justify a high valuation. As Graham said, we felt pressure to hire more because we wanted to get bought. I mean, they wanted to sell the company. So by 1998, the headcount had grown to 21, but most of the core product, it was still being developed by the original three founders. Now, the customer base swelled, obviously, revenue rose, and that's when Yahoo took notice. And in June 1998, Yahoo acquired ViaWeb for $49 million in stock, and it became Yahoo Store. Now, as I said, I don't know how much outside investment they got, so I don't know how much Graham and his two co-founders shared amongst them, but they got a nice chunk of it. But within a year, Graham left Yahoo. His co-founder Morris followed. Both were wealthy, but disillusioned as well, because ViaWeb had worked, but the culture of innovation that built it, it didn't survive inside Yahoo. In the aftermath of ViaWeb, Graham turned to writing, and his essays such as Hackers and Painters, Why Nerds Are Unpopular, A Plan for Spam, they became underground hits for coders. So he was very, very influential with his writing. And his recurring gospel, I suppose, was elegance, speed, small teams, and trust in hackers. And in Graham's telling, venture capital was the enemy. And he had very good reasons for not favouring VCs. He argued that VCs often have business models requiring them to invest large sums, not necessarily because the startups need that much capital, but because it's what the VC's fund structure dictates. This can lead to startups receiving more money than they actually need, and this in turn pushes them towards unsustainable growth strategies. VCs often seek significant control over companies' decisions. They have a tendency also to follow trends, so they invest in startups that are already attracting attention, rather than making independent judgments. And finally, he felt that VCs, they often reject promising startups for superficial, silly reasons, such as the founder's age or their lack of formal business experience, rather than evaluating the core idea or product potential, or even seeing the potential in these founders. These founders will grow with the business. They can be helped along with proper mentorship. And so, in 2005, Graham and his then girlfriend and future wife, Jessica Livingston, they were walking through Harvard Square discussing an idea that came about because of Graham's frustrations with venture capitalists. Graham was envisioning a new model, a fund that backed hackers, not MBAs. ViaWeb had proven that it could be done. And now Graham wanted to help others do it faster, do it better without going to VCs. And everything he'd built up to now, the code, the essays, ViaWeb, his own beliefs, they led to this moment. As he said to Livingston at that time, why not create a seed fund that makes lots of small investments in founders that are still in college, or maybe, not even in college, And by the time they reached Graham's house that evening, the idea had crystallised. Graham would put up 100,000. Livingston would quit her banking job. And his co-founders in ViaWeb, Trevor Blackwell and Robert Tappan Morris, they chipped in $50,000 each. And the 4 co-founders launched the experiment with $200,000. Now, they called it Y Combinator and it became known as YC, and I'll be referring to it as YC. Now, I'm not going to try and pretend to understand the significance of the name, but here it is. It came from a concept in computer science that allows a function to call itself, essentially enabling recursion. So if you understand that, fair dues to you. But Graham found Y Combinator to be one of the most fascinating ideas in programming. And more importantly, though, he saw it as a fitting metaphor, because just as the Y Combinator helped functions run themselves, the Y Combinator fund would help startups get themselves off the ground. And so in summer 2005, they announced a Summer Founders Program, offering young teams a few $1,000s, hands-on mentorship, and dinner every Tuesday night in Graham's kitchen. And the initial investments were small, about $6,000 per founder, for roughly 6% equity. And the legal structure, it was so novel that they weren't even sure it was legal. As Livingston later admitted, it seemed so lame our own lawyers tried to talk us out of it. But the applications poured in. By June 2005, YC had selected its first batch of 8 startups, and the atmosphere was, scrappy, communal, very informal. Livingston bought groceries and folding chairs. Graham cooked pasta, and he challenged the founders with questions like, "What's your plan to take over the world?" And among that first batch was Redis, then a barely formed idea from 2 University of Virginia graduates, and Looped, a location-sharing startup founded by Stanford dropout Sam Altman. One of the key elements to YC is Demo Day. I love the sound of this. This is a seminal event in the program. It's the culmination of the startup's journey through the intensive 3-month mentorship program, because during this event, during Demo Day, founders have to stand up and present their companies to an invite-only audience, and they have just a few minutes to make their case. Kind of an elevator pitch, really. The first Demo Day in August 2005 drew about 15 angel investors. I'd imagine they were curious but skeptical, but the concept worked. Within a year, Redis was acquired by Condé Nast, and Looped will go on to raise millions. YC had its first proof of concept. And of course, flush with this early confidence, YC expanded. In winter 2006, they added a second batch of startups, this time in Mountain View, California. By 2007, YC was producing about 40 startups a year, and it was during this phase that YC funded some of the tech world's future giants. Dropbox, led by MIT graduate Drew Houston, he applied in 2006. Graham was initially hesitant about backing a solo founder, so Houston solved the problem by quickly recruiting a partner. And his 2007 Demo Day impressed investors so much that one tried to cut a deal before the event even ended. Just a quick reminder, while these shorter weekly episodes released every Wednesday are free for everyone, for just $1.99 a month, you get access to our co-hosted hour-long episodes released on the first of every month, where Keith and I do an even deeper dive into an incredible business story. Some of these hour-long episodes are still free in our back catalogue, so you can get a taste of what to expect. Now, as well as getting access to these monthly co-hosted hour-long episodes released on the first of every month, behind the paywall are additional bonus episodes, and over the coming months we'll be adding more bonus content for subscribers regularly. Also, as a subscriber, you can listen to these weekly episodes ad-free, so you won't have to listen to me telling you about our great subscription offer. And it is great value for just $1.99 a month. You can subscribe via Apple subscriptions, Spotify subscriptions, or on Patreon using the link below, or go to patreon.com/Great Business Stories. Justin.tv was another startup of YC's 2007 summer class, and it began as this kind of quirky live stream of co-founder Justin Kahn's life, but it pivoted into Twitch, which Amazon would later buy for nearly $1 billion. Other influential graduates included Scribd in the winter of 2006, Discus in the summer of 2007, Weebly in the summer of 2006, and also a service that was initially called Airbed and Breakfast, later known, of course, as Airbnb. Despite these hits, YC still faced a lot of industry skepticism. Sandhill Road insiders, and Sandhill Road is where all the VCs have their offices, and again, Sebastian Mallaby in his book The Power Law details these Sandhill Road VCs with really great stories. They dismissed YC as unserious. One venture capitalist reportedly told Paul Boucher, I think I'm pronouncing that right, Gmail's creator and an early angel investor with YC, this VC said, "No good company is ever going to come out of this." But Graham, he didn't take any mind of that. He believed that if you backed enough smart people, some would break through. Airbnb became his favourite example. As he said, Airbnb's plan was actually insane. But what sold him on Airbnb was the founders, their hustle, their ambition. Now, by 2009, managing dual programs on opposite coasts, it had become unmanageable, and Graham and Livingston, they made a call. YC would move full-time to Silicon Valley. Cambridge, the birthplace of YC, was closed. This same year, YC also attracted its first outside capital. Sequoia Capital led a $2 million investment, joined by really prominent angel investors, including Ron Conway. He's this legendary angel investor who had been an early investor in Google, PayPal, Napster. Now, this marked the end of YC being bootstrapped by its own founders. And it should be noted that yes, Sequoia is a VC, but their investment and involvement was very much on Paul Graham's terms. Then in January 2011, Graham summoned the new YC batch to an unannounced meeting in Mountain View. No one in the room of 99 founders who represented 40 startups knew what they were there for. And Graham introduced a guest who appeared on one of Trevor Blackwell's Anybots. These were this robot on wheels, really, that was wheeling through the room with a screen for a face. And on the screen was Yuri Milner. Now, Yuri Milner is a very interesting guy. He also features in Sebastian Mallaby's book, and I'm definitely going to do an episode on him. He's this Russian billionaire who made a name for himself by putting in huge investments into Facebook and Zynga. Now, Ron Conway was also there, and the offer was as follows. Milner and Conway were offering each startup in that room $150,000 on a convertible note with no valuation cap, no immediate strings. It was the most founder-friendly deal Silicon Valley had ever seen. Like YC's own standard investment, which by this stage had grown from $6,000 to $17,000, it was dwarfed. This was dubbed the Start Fund, and it totaled $6 million. The terms are so generous that some people just thought they were crazy. One YC insider admitted that many of the funded companies hadn't even decided what they were building yet. But that was the point, you see. The bet wasn't on the ideas. The bet, or the investment, was on Graham. It was on YC's selection instincts, on the philosophy, the mentorship, on everything that Graham had harnessed and that YC was about. And by 2012, YC had graduated from this scrappy summer program to a full-blown startup factory. Demo Day was no longer a quiet showcase for, a handful of curious angels. It was now split over 2 days just to handle the crowd. Hundreds of VCs and tech insiders packed into the Computer History Museum where the event was now held. And many were unable or unwilling to wait for pitches to end before pressing their business cards into founders' hands or texting them mid-presentation. As one observer noted, it's a feeding frenzy. But the results spoke for themselves. By the end of 2012, many YC startups closed their seed rounds within weeks or even before Demo Day. One gaming company, Humble Bundle, it raised $4.5 million without even stepping on stage. Also, the first unicorns from the initial batches started to emerge. Dropbox and Airbnb both crossed the $1 billion valuation mark. Stripe, which was quietly backed by YC in 2010, That now stepped into the spotlight. It was handling billions in transactions by 2013. Coinbase, a 2012 graduate of YC, it was riding crypto's first wave. At the time of recording this episode now, Stripe has a market cap of 70 billion. Coinbase is worth 45 billion. Now, some critics did give out about maybe accelerator overgrazing, they called it. But Graham pushed back. He said more startups meant more shots on goal. But after 8 years of running YC, Graham and Livingston were ready to step back a little bit. Their first child had been born in 2010, another was on the way, and the grind of batch after batch leadership, it was becoming unsustainable. Graham began preparing to step back from the day-to-day operations. Livingston also, she was the glue behind the scenes. She had carried a lot more weight than people realised. She was involved in resolving founder disputes and managing the chaos and protecting YC's culture from ego, from burnout, and together they'd made YC more than an accelerator. They had built it into this community, but they wanted a break, and they'd earned it. Now, in terms of earnings, and in terms of what Graham had earned himself from his involvement in YC, the estimates vary widely. Like, some publications have done back of the envelope calculations that have his net worth at $2.5 billion. But based on my research, those evaluations, they're pretty simplistic. Other estimates have his net worth at about 50 million. But the fact is, we don't know, and Graham isn't telling. What we do know is that after, semi-retiring, Graham and Livingston continue to live a very modest life in the UK. By late 2013, a successor was already in mind, Sam Altman, who, as a 19-year-old, had joined OIC with Looped in its very first batch. Altman, now 28 in 2014, he took over, and the next phase of YC would be driven by scale. Graham described Altman as fearsomely effective and yet fundamentally benevolent. And Altman's ambition was to 10x the impact of YC while preserving its core belief in the power of exceptional founders. And he wasted no time in broadening YC's reach. In 2015, he launched the YC Fellowship. This was a remote, low-stakes entry point for very early founders, offering $12,000 grants. And though this program was short-lived, it signalled a new philosophy, really. Lower the barrier to entry, cast a wider net. Internally, YC also began funding biotech and hard tech startups. So this was a big move from Graham's more software-centric roots. And they also launched a non-profit arm, YC Research, to explore ideas like universal basic income, futuristic cities. The pace quickened in terms of batch sizes. They went over 100 now in each batch. The Continuity Fund launched in late 2015 with $700 million under management. And this, crucially, it allowed YC to back its graduates all the way to late stage growth rounds. So that's very, very important. But 2016 brought turbulence. Paul Graham continued with his essay writing, and one of his essays was titled Economic Inequality, and it ignited a backlash because in it he was defending startup generated wealth gaps. Critics accused him of downplaying wealth inequity, and there was also other internal tensions surfaced over Peter Thiel's involvement because he was a part-time YC partner, and in 2016, of course, he was one of the more vocal Trump supporters. Now, myself and Keith will definitely be doing a subscriber episode on Thiel, and it might even have to be a two-parter because Thiel is such an intriguing character and he's been involved in so much. But after Thiel donated $1.25 million to Trump, many called for his removal from YC. Altman rightly refused, arguing that YC must tolerate political diversity. As he said, cutting off opposing viewpoints leads to extremism, and I happen to believe in that. Still, the affair did leave scars, and YC, they quietly phased out the part-time partner program the following year. By 2017, YC had moved into political and cultural debates. Altman joined protests against the Trump administration's travel ban. He encouraged other tech leaders to speak out. Internally, YC doubled down on inclusion. They had more female partners. They did extensive outreach to Black and Latino founders. And 22% of the summer 2017 startups had at least one female founder. But 2018 was YC's most, I suppose you'd call it, audacious year, in that Altman unveiled plans for YC China. Now, this closed within a year as a result of geopolitical and cultural challenges. And quietly, Altman himself prepared to step back. He was increasingly focused on OpenAI, and in 2019 he stepped down. So YC had outgrown its founders and even its second generation. It was now an institution. It was global, systemized, powerful, and very, very influential. And while the leadership baton passed smoothly when Altman left, this moment also marked Graham's and Livingston's final retreat from YC's day-to-day life. They had been involved in a kind of part-time basis up to now, but having moved to the UK, they no longer participated in batch selections or interviews. But Graham's, I suppose you'd call it, philosophical fingerprints, they remain visible. As one insider put it, Graham would still send the occasional transcontinental bolt in the form of a blog post or tweet, and he caused waves. And I'm happy that he did. His 2020 essay, Billionaires Build, reinforced this belief that he has that founders should be free from societal pressures. Now, not everyone in YC agreed with his positions, and I don't agree with all his writings, but he is still revered, and rightly so, within the organisation. Jerry Tan became CEO in 2023, and that year he brought Graham on stage for a fireside chat at the alumni reunion. Graham joked about being out of touch with YC's scale, but he affirmed his pride in how the soul of YC had endured. This was, I suppose, a symbolic passing of the torch, a moment that confirmed continuity, but also the evolution of YC. Now, happily, Graham hasn't been idle. He's still this inquisitive intellectual. He has continued to write essays on topics ranging from startups to technology to philosophy and education. And his essays, such as How to Do Great Work, they delve into the nature of ambition, of creativity, and of the pursuit of meaningful work. And these writings are available on his personal website, paulgraham.com. I really recommend you go there. You mightn't agree with all his writings, but they're interesting. And he's very focused on personal projects and family life. He continues to express the importance of following one's interests and following one's curiosity. You know, not just in professional endeavours, but also, you know, in your personal life, in your family life. And that's exactly what he has done. And that's why I admire him so much. But his impact on business has been huge as well. Like Airbnb revolutionized the hospitality sector. Stripe transformed online payments. Coinbase has emerged as a leading cryptocurrency exchange and plays a pivotal role in bringing digital currencies to the mainstream. And remember, these are just 3 of a total of 5,000 startups that Graham has helped fund. And the thing about these startups is that they're not just faceless companies. Startups are people. And what Graham did was he backed people. He gave them money. He gave them the mentorship. He gave them the foundations to, at the very least, help these fledgling founders reach their potential. And in doing so, crucially, what I really like and admire about Paul Graham is he gave them confidence in their abilities. He gave them a chance. And to me, that's a great thing to do for anyone. And it's why, while I may not agree with everything Paul Graham might write or say, that's okay. He is, in my opinion, a great person for what he has done. And that's why I believe this is such a great business story. I hope you've enjoyed it as much as I have. And remember, if you have any comments, any corrections, or any story that you'd like us to cover, email us at info@gbspod.com. All the best, folks.